I'm very pleased to say that we're joined now by the China Securities Regulatory Commission Vice Chairman, Dr. Fang. Dr. Fang, great to see you.
Good to be here.
Let's begin on touching on something quite important that's dominating the news cycle at the moment, and that's the coronavirus spreading in China at the moment. Could you give your brief assessment of where we are, economically speaking, and the damage that we could see to the Chinese economy in the coming months?
Well, obviously it's a challenge, right? But if there's any country in the world that can deal with this kind of challenge well, it must be China. So I have no doubt that our government and the people will be able to deal with it in a timely and effective manner, and whatever damage it may have to the economy is going to be very limited.
Do you worry that it comes right ahead of the New Year celebrations in China?
Well, it's a little bit unfortunate, the timing, but you cannot control, the break of the virus. But it just, the net effect is it imposes certain inconvenience to travelers, particularly to and from that city, Wuhan. But the rest of the country should be okay.
Let's get to the Phase 1 agreement between China and the United States and focus exclusively on the market side of it. I'm going to go through things point by point and get your sense of where this is actually heading. So a range of agreements. One of them is that by April 1st, 2020, China will eliminate the foreign equity cap for securities companies. Is that right? April 1st, 2020, that gets done?
Yes, we will.
The next one, China will eliminate the foreign equity cap for fund management companies by April 1st, 2020. We can achieve that too?
Of course, no problem.
One outstanding concern of some people, there is a rule that caps foreign holdings of listed companies in China at the moment in and around 28%. I know the index providers would like to see that change as well.
The law is 30%, but they limited it to about 25%.
Can we do something there? Can we achieve something?
I think there's a potential to raise that cap to more than 30%, because there are a few other countries like Japan, Korea, their cap is about 50%. So why shouldn't China do similar things? Now, of course, this has to go through a quite long process in our decision-making system, but in principle, I think that's possible.
Over what time horizon? How quickly?
That really depends on how many companies, 30% limit are hit, right? Because right now we only have about 2 or 3 companies that have hit that limit, right? But we have 3,800 companies listed, so we will see. I mean, the good thing about China, our decision making is that we are very responsive, right, to the demands and the requirements, the needs, of the international investors, and we will always take their needs into account.
The market is opening up. I understand also that US investors can now buy China non-performing loans. Am I right? There are some concerns about that.
Yes. That
China might be opening things up as things get a little dicey in the debt market. The following quote is from a US senator, quite prominent. I'm sure you know who he is, Senator Rubio. They're his words, they're not mine, so forgive me for using them. But this is what he wrote in the New York Times very recently. American dollars aren't being invested in Chinese companies that succeed based on their honest business model and ability to grow. They're being invested in companies that exist to serve a Chinese Communist Party intent on undermining America, human rights, and religious liberty. He goes on to say, investing American capital in China may earn better returns in the short term, but it will come at tremendous cost in the long term. What do you say back to Senator Rubio?
I think he's mistaken by viewing China as some, kind of a negative country, right? A country that would somehow damage the interest of the international world. That's completely false. China is a peace-loving country. China is busy, making the economy better performing, so that its people, right, the Chinese people, can enjoy a better life, and encouraging international investors to invest across countries will make all the lives of the people, whether it's in the US or China, better. So I think he's mistaken by viewing China in such a way, which I totally disagree with.
I understand that. He goes on to say something else. He's pushing what's called the Equitable Act in the United States. Some senators have got together and they're pushing this through Congress, trying to get more support for it. He said the following, that it would increase oversight of Chinese and other foreign companies listed on American exchanges and delist firms that are out of compliance with US regulators. The legislation will force the Chinese government, which currently blocks US regulators from viewing the full audit reports of publicly traded companies, headquartered in Hong Kong and mainland China, to change behaviour. These are long-standing issues over auditing. Can we address them?
I think we can address them. In fact, the CSRC, which I work for, has proposed a set of solutions to address exactly this concern.
Let's talk about them. What are they?
We don't disagree with the proposition that Chinese companies listed in the United States should follow the regulatory rules of the US, right? And one of the rules is that the US regulator should be able to examine the working papers of the auditor, which audit the books of the listed company, right? But most of these auditors are based inside China, so when a foreign regulator wants to view these auditing papers, we have to kind of work out a process for them to view it, right? So at the same time, they can get their own job done, but on the other hand, China needs to protect our national security sensitive information as well.
What's sensitive though? These are publicly listed companies.
Oh,
they're listed on US exchanges.
Yes.
What is sensitive?
Give you a good example.
Please do.
Suppose it's a natural resource company, right? And it has data on on the reserves of that company, whatever mineral reserves, and a lot of these reserve information is very national security sensitive. So we don't want these information to be diverged, but the rest of things, they can.
Can you appreciate though that if there isn't full transparency, that they shouldn't be listed on US exchanges? Do you appreciate that argument?
When you say, full transparency, yes, in principle I agree, but there's still these details that I just mentioned that we have to work it out. And we believe, the CSRC has a viable proposal. We've already sent it to the US regulators. And I think if they have a honest intention to resolve the issue, we can do it.
What's the reception so far?
They are looking at our proposal actively, but we have not heard back from them yet.
When did you send it to them?
About a few months ago.
There is a big concern that we're heading to financial decoupling, that you're opening up, but some people in Congress aren't happy with this deal. They think there should be a financial decoupling, that China is opening up on its own terms because it needs the capital, and that it's not doing it for the good of the world, it's doing it for the good of China. Now, there's ultimately no problem in that, but is that the argument that you're suggesting?
Well, China actually is a high-saving economy.
It is.
So we do have a lot of domestic capital, but that does not mean we don't need or we eschew international capital. Capital flow across borders is good for all the countries involved, and so I totally reject this idea that somehow that the U.S. should restrict its own investors from investing into the Chinese market.
But China restricts U.S. investors from investing in Chinese markets. Why should the United States?
That's not true.
That's not true?
That's not true.
We just started a conversation. You limit the amount they can hold of a Chinese company.
Well, that's for corporate governance purpose, right? 30% is a lot. Think about it. The Chinese capital market capitalization is what, about 50 trillion
But if we
RMB,
truly
right?
want
30%
open,
is a lot.
if we truly want open liberal markets, why should we have any caps?
You mean like the 30% cap?
Sure. Why should it exist?
Yeah. That is something that most countries practice, by the way.
I agree.
mentioned
President
that, right?
Xi came here about 3 years ago and he talked about the liberal order, globalization.
Yes.
If China truly wants to be the flag carrier of that, why don't they lead the way?
Well, you open up, you welcome foreign capital in, but you also want to make sure that corporate governance is well practiced, and certain companies they have this national security implications, and they should be under Chinese control. So we need to maintain a good balance between opening up and security.
Dr. Fang, it's great to talk to you here at the World Economic Forum. Thank you very much for your time.
Thank you.